Thank you, Nicolas, and good morning to everybody. It's a pleasure to be here again at the Afore conference and to be with you, and also to speak today about this topic. But before I speak about the topic, which I think is probably, at least is dear to me, maybe a little bit dry, data sharing, particularly what I want to speak about. But I like the title, making the right policy choices, although I must admit that, and I think it's very fitting, that somebody for me that is a lefty, I wonder, what will mean to make the left policy choices, but maybe it should be making the policy choices that are left to us, I'm not sure. But this idea that right is correct, which I think you have in mind, left is okay too, it's no problem to be a lefty, just making a small point. Now, I think that, however, making the policy choices that we should be making, it's important, and it's a very important part of the debate that we have right now. And, as we all discuss the need, particularly in Europe, for increased competitiveness and efficiency, this is driving, I think, most of the debate that we have in all areas, including in the access, sharing, and use of financial sector data. But I can talk about that in the financial sector. Over the coffee break, we just had a discussion about the other sectors in the economy. I think this is the theme of the day. Now, the search for the best way to use increasingly available data applies, I think, to every stakeholder, to firms operating in the industry, to consumers that want to control how their information is being used and disclosed, and to regulators, for which is a key input to ensure proper assessment of risks in the system and of regulatory compliance by the system. In our society, data has become a key competitive input, as somebody in the past, very famous that from the financial industry, says the new gold. And at the same time, technological developments are opening up so that a new range of possibilities on how we collect, process, and share and use the data are constantly in front of us, and we need to make choices about them. From the regulatory perspective where I stand, a harmonized, proportionate, and fit for purpose, reporting system that relies on integrated and efficient reporting and data sharing processes for the benefit of all stakeholders should be the basis for operating. And this is a priority for us at the EBA. Also, from the policy perspective, the developments in open finance have expanded data access and data sharing possibilities, thus producing positive impacts on consumers and financial services at large. But again, positive impacts are not always granted, and we need to make sure that they are developed in a context of regulatory framework that foster those positive impacts. So let me focus my intervention on two parts. First, I would like to start my intervention by sharing with you some of the EBA's work on one of our key strategic projects, which is the integrated reporting system, which is aligned with the goals, I think, of today's broader topic of how better to use data, open finance. And then I will focus on the benefits and risks that the open finance framework, I think, will bring. Integrated reporting is a project that we have been developed with the European Central Bank, and it's looking at how to integrate data from the banking sector covering the resolution, the prudential, and the statistical needs of the different supervisory authorities, building, hopefully, on a strong governance and cooperation among those authorities. The aim is to equip the supervisors with the right tools and data to preserve financial stability and respond faster to market developments and to consumer needs, but in a cost-efficient way. Given the push for simplification and overall cost awareness of regulation in Europe, I believe that integrated reporting, including data sharing and reusability of that data by different authorities, is an obvious area where we need to focus our attention as regulatory authorities. Integrated reporting should be the paradigm for the future of reporting, I believe. A new way of organizing the reporting process that would increase the efficiency and the effectiveness of that process while reducing the cost for the stakeholders involved, be it those that define the data, those that produce it, those that have to report it, or ultimately those that use it, which in our case will be that part. The core idea of the integrated reporting system is that authorities should closely collaborate in coordinating their data requests, starting from a common definition of the data, so as to avoid redundancies and duplications, to ensure that once the information is requested from a supervised entity, then it becomes available and shared among all the authorities so that they can use it for the different needs without having to request it back from that entity. This contrasts with the current reality where there's often limited collaboration between the authorities in developing the data requirements, leading to a multitude of different standards, processes, definitions that may be similar, but they're not the same. And if they're not the same, they must be very different. Thus, resulting in hurdles, data sharing reusability, hurdles in data sharing and reusability, with significant costs also for the system overall. To put together this system of integrated reporting is not an easy task. I know it sounds nice, but I can tell you it's not an easy task. It requires a strong willingness to act, a long-term vision, and the determination to change habits from the inertia of how things are being done right now. It's not a short-term task also. It will take time, but it's important to have clarity on where the final destination should be. And I hope I gave you an idea of where I think that should be. The three main building blocks that we're working on to try to put this together is, first, strong governance and arrangements that will ensure collaboration among authorities and with the industry. In this regard, last year, in 2024, we, the EBA, signed with the ECB memorandum of understanding and created a joint bank reporting committee and a reporting contact group to foster cooperation between the authorities and between authorities and the industry to try to enhance that process. The Joint Bank Reporting Committee is composed of prudential and statistical authorities across the EU landscape, representing EU institutions and national competent authorities. The reporting contact group is composed of industry representatives that will provide feedback to ensure the work done is fit for purpose. The Joint Bank Reporting Committee, in collaboration with this industry contact group, will provide advice to the authorities on how to progress towards an integrated reporting system, ensuring the use of common definitions and data modeling standards, and promoting afterwards data sharing and coordination across authorities. So the second pillar I already mentioned is a common data dictionary. You know, when we talk about collaboration, common understanding, digitalization of information, anything of that sort requires a standardization on what is it that we're talking about. Standardization, what is the definition of the data that we're talking about. At the core of any integrated system, we need to have a common data dictionary. For this reason, the focus of this joint bank reporting committee that we just created in the immediate period right now is to progress in the work of creating this common data dictionary, at least for, as I said before, for credit institutions reporting data. The third pillar is a central data collection point. This is a long-term vision of the integrated system, but irrespective of what technical implementation that will imply, I think a central data collection point would enhance the cooperation and coordination of data requests and facilitate a more efficient access and sharing of data among authorities. The Common Data Dictionary, it's already, as I said, a project that is in place and we're working on it. That will greatly facilitate the development of the central data collection point, but that should be a third pillar that will be working in the medium term. This integrated reporting project that we're implementing together with the ECB, as I mentioned before, and with all the other competent authorities in the banking supervision world, will cover the regulatory reporting, the resolution, as well as the prudential reporting, when I talk about regulatory reporting, as well as part of the statistical reporting that banks are currently required to provide. I also mentioned that one of the longer-term components of integrated reporting should be this central data collection point that should facilitate the collection of the share of the data. I mentioned that that's a long-term project. An intermediate step to achieving such an integrated reporting is to put in place adequate mechanisms to facilitate and sharing of data currently being reported already. And in that context, I like to refer to the agreement on the proposal to facilitate data sharing and reduce reporting burden in EU financial services that was reached by the co-legislators back in December. And I hope that that will help us move in a small step, but a good step in the right direction. This is not by far the end of the journey, this proposal, which, as you know, at this time, at the moment, covers only data sharing among EU institutions and not with national authorities, but it's a step on the right direction. Finally, I also would like to acknowledge that the integration of reporting in the banking sector that I just highlighted that we're working jointly with the ECB should only be part of a broader project, which is the supervisory data strategy of the European Commission that probably many of you know, which starting from the integration of regulatory reporting at sectoral levels, it aims to achieve an integrated reporting across the all financial sector. Now, let me quickly now turn to the topic of data sharing in the financial sector among participants, i.e. the open finance or the FIDA legislation, which is also, I think, the focus of the panel, probably the majority of the focus of the panel that we're going to have afterwards. I'm sure you all probably know that the FIDA was proposed in December last year. The commissioner this morning said that it's very much still on the table and will continue to be on the table, which is good news, I think. It's part of the broader efforts of the Commission to modernize financial regulation in light of digital transformation. And in that sense, I think it should be part of the discussion. And it's also, building on the experience that we developed through the establishment of PSD2 for payment and information that we have there for payment accounts, in which we have contributed as the EBA a fair amount of that area. And we think that that was a positive experience that is worth expanding to the extent necessary. The FIDA framework aims at improving data accessibility among financial institutions and establishing a standard approach to sharing standardized approach to share customer financial data, while also ensuring appropriate safeguards for consumer protection. So those are good goals. The long-term objective of FIDA is to enable institutions to provide more tailored financial products and services to their customers, such as customized investment opportunities and streamlined loan applications or other competitive interest rates offerings. So all this should be to the benefits of consumers, SMEs, to benefit our society. So it's a goal clearly worth pursuing. Now, FIDA sets out a number of goals, like harmonized rules governing the types of data to be sharing, the mechanisms for sharing the data, the compensation for ratings that make that data available in the industry, and the requirements that give consumers control over their data. We have also contributed by providing some additional information on areas where we think that further clarification from the proposal will be forward. For instance, in clarifying also where the liability may arise if something goes wrong in the issue of data sharing, and which should be responsible for what part of that potential liability, which I think is an important aspect. As you probably know, the Council has already reached an agreement on this position in December, so that's also good news, although they have made some amendments. I will not go into the detail of the amendments. Some of them are, I think overall, they stay loyal to the FIDA proposal, but some of the amendments are probably, as usually happens with the process of co-legislation, is sort of pushing back, I would say, on the ambitions of the initial proposal, and that's probably not good. So we look forward to the trialogues. We look forward to this process being finished, and we stand ready to support, like we did with PSD2, on the institutions achieving the objectives of that legal test. But let's admit that there are important challenges in that implementation. The first challenge is for any regulatory authority developing and supervising whatever comes out of FIDA rules, is to find appropriate balance between competing demands that are going to come out of FIDA. And I mentioned before them, but just to one clear example, FIDA wants to achieve competitiveness and provide tangible benefits to industry and consumers by opening up the data, but at the same time, it also wants to safeguard security. And we know, I already mentioned our concerns about potential liability claims and who should be responsible for that, but that's a clear trade-off that would require to be made and that would have to be concrete. But just because there are trade-offs, we should not be concerned about them, and particularly we should not be making those trade-offs more significant than the goals or the objectives. And I think FIDA, although poses an important challenge to everybody, it's a goal worth pursuing. Just to finish on FIDA, I think it also poses an important challenge for the industry. Banks, which is the one part of the industry I know best, and other financial institutions, and I think particularly incumbent firms, need to move away from perceiving FIDA as merely a compliance exercise, and instead I think they need to embrace the strategic opportunities that regulation may offer. To me, some of those opportunities will include the possibility for banks to change their digital distribution patterns that they currently have, i.e. the digital methods and channels, which many times are based on stranded systems, towards more a highly personalized and instantaneous product design for customers, which I think is an area they can develop. FIDA has also potential to foster online platforms that aggregate services from various providers, which will require, again, banks as the big incumbent firm to consider how are they going to participate in those platforms as they develop. There's also the opportunity arising for financial institutions to use data from other financial institutions. Banks now are too concerned, I think, about preserving their own data, rather than think about how they can use other people's data. I always find it a little bit asymmetric. Everybody wants the bank's data. It seems that the bank doesn't want the other people's data. So we need to make sure that that's a bit more balanced, I think. And the need for banks to establish with their data sharing strategies, also within the FIDA guidelines, what is the appropriate technological infrastructure that they could be using, the APIs, but not just technology, also the right incentives, what's the remuneration, How they're going to be basing the remuneration be for their internal employees of whoever participates on that more likely to be disintegrated value-added chains of distribution as we go into an open finance. So let me conclude, because I probably talked for a bit longer than I should have, by highlighting the common principles that I think are guiding both of the initiatives I tried to describe to you today. And that is the pursuit of an integrated reporting system that I spoke about, and also the initiative around the data sharing in the context of open finance. To me, it's digitalization and technology. It's a real underlying trend, technology. I always like to say, technology once invented, you cannot disinvent it. You cannot pretend it doesn't exist. It's a real trend. It's a real trend. There's no going back. So digitalization and technology are allowing us to gather, process, manage, assess, act on information, act on data better than ever before. I think that the substance and the objectives of reporting and open finance may be distinct, may be different, but at the same, they're both driven by the same input, which is data. And as a result, I think both of them need to be reassessed within the context of the world in which we're living today. And I think that it's our job to take that technology, to get those opportunities and convert them into advantages that these developments may offer us to provide better services to our citizens going forward. So thank you very much for your attention, and I look forward to continue exchanging on these topics.